Hey everybody, welcome to Trading Capital's exclusive analysis on natural gas. It is April 22nd, 2022, here on this Friday, wrapping up the week in the markets. I am your head market analyst, Curtis Scouten. Let's jump right into the technical charts on natural gas. Here you can see we have had a beautiful pullback off of our key technical levels that we issued a couple days ago. Beautiful downside action for those of you who are shorting via the UNG or buying the inverse ETF, the KOLD double, are starting to churn a beautiful profit. Where I'm personally looking to take profits is right in this blue zone here. You can see the reason why I'm prepared to take profits there, because it is heading into a support zone. You have these previous wicks here, the previous all-time high back in October, sorry, not all-time high, the previous high back in October. And then also you have, if you scroll back down on the charts, let's just go to a weekly basis time frame. Excuse me while my chart loads. If you go to the weekly basis time frame, you have this double top, and then you also have those pivots. So you have three major pivot points all coming up in the very near term here. Now, you are on a weekly basis. You've put in this mega reversal candle, so it stands to suggest that this top is going to hold until you have a beautiful correction, at least down to the 50-day moving average. But let's analyze the previous cycle, shall we? So that was the 50-day moving average on a weekly basis that you corrected to. But looking at the daily chart here, you can notice the previous pivot high on natural gas. So you had this beautiful engulfing bearish reversal candle, and then you had a few days of selling that preceded. But then look at the retrace back to basically 70-75% of the high. You retrace the full move, which would have been a beautiful secondary short level before you ultimately had your big downside move. So what I think can happen is once you hit this level of support, and ultimately, this support level could break lower. I mean, we could see a straight drop down to there. But since natural gas is reacting the same way or very similar to the way that oil dropped, oil has not dropped down significantly down to its lows. Now, they are two different commodities, but the fact that they topped basically on the same trend line, the 1990 pivot high, and the 2014 pivot high, which connects to the 2022 pivot high. They've both put in a weekly topping tail. They're both checking all the factors. They're historically lining up with their 4 to 8 week topping cycle. When one tops, usually the other one's 4 to 8 weeks behind. So a lot of these correlations are lining up, but we are going to take profits on our KOLD if we get a final flush down on Monday. I mean, we could see a bounce on Monday up, then I'll look to probably hold my short. But if we see a final push down on Monday, I'll be looking to exit my short in and around this blue range here. Okay, so just keep that in mind, be alert. If we go to the intraday basis, one of the reasons why is when you look at this bear flag pattern here on the 4-hour chart, pretty much a fully measured move takes you down to this impulse bar breakout. So that's probably where I'm going to be looked to on an intraday basis to take profits. So it's another few percent down. And then if natural gas acts the same way and it bounces and has a retrace back to, potentially these highs up here or even halfway through the body, I will be looking to reshort natural gas. And now the beautiful thing about reshorting this is you could potentially rinse and repeat the trade. And you have a tight stop loss. You'll have this wick high, and it'll be on a weekly basis. If you flip to the weekly chart, it is a very strong weekly reversal candle. It's not a topping tail like this one because the wick isn't as long as the body, but nonetheless, it is a huge reversal candle. Pretty much a bigger move than this whole previous green candle. Now you haven't engulfed it. That would have been uber bearish. But this is a powerful topping signal that you have to respect. And simply having a stop loss just a little bit above that level will ultimately help you mitigate any losses should natural gas continue a parabolic ascent. Now, I don't think it's going to carry a parabolic ascent. There's a lot of analysts and people saying it's coming to take out its all-time highs here. They clearly don't know the natural gas market. There's natural gas is not a rare commodity. People have to remember that. It just tends to have these, catalytic spikes. And one of the reasons it spikes so high is because of the demand in Europe for natural gas. And essentially with Russia putting the squeeze on Europe's energy security by only selling them their natural gas priced in rubles, and the NATO does not want that because it strengthens the Russian economy while there's a war going on, which we've clearly seen based on the ruble to the dollar. The ruble has actually fared better than the dollar in and around this war. So that is something to really respect, that the ruble and the currency war that Putin is playing is clearly, numbers don't lie, it's clearly demonstrating a stronger ruble as opposed to a dollar when the war started and where it's at now. So getting very close to natural gas. A couple resources I want to share with you guys for natural gas energy. Just simply supporting the thesis as to why I think natural gas is slowing. And the commodities could be used as a leading indicator in terms of a potential top in the overall economy. You tend to have these blow-off tops, and then all of a sudden after the blow-off top occurs, you start making lower lows because generally the economic output and the global growth is slowing, so therefore you don't need as many consumer goods, commodities, etc. But this data from the IEA represents clearly in 2020, and now we're in 2022, so 2 years behind, but it starts showing you this rollover and downtrend, which could start to forecast a potential downtrend, just like it happened here in the 2008. Obviously, we had the housing crisis, the GFC, the Great Financial Crisis, and then all the way to 2010 when it dipped. So you had this slower declining demand in natural gas. So here you're also experiencing that same slowing in demand for natural gas. So it should support the thesis that natural gas heads lower. So that resource is the IEA. They have tons of different information on natural gas and the whole shebang. The other thing that I want you to recognize is the EIA. So though it sounds very similar, the two, but they're just transposed, the vowels. So one's the IEA and one's the EIA. So this one is more of your government website, lots of statistics on demand, reserves, production, imports, exports, storage, consumptions. And natural gas is very volatile for one simple reason is because we get weekly updates on reserves and basically what it's looking like in terms of the builds and the forecast for the demand. So here we're looking at KOLD, which is the inverse ETF we're playing. You could hold the KOLD up until this gap fill here at 1258, which is roughly another 14% away, which stands, it's a double, so natural gas would have to fall another 7%, and that's basically the UNG that would have to fall 7%. So let's look at the UNG just to compare what we're seeing. So when the UNG fills this gap, I don't think it's going to fill the KOLD gap because of the slippage on the KOLD. So when you see a gap on the UNG chart, it often doesn't line up with the gap on the KOLD due to the inverse ETF nature and the slippage occurring, the decay, the beta decay on the KOLD ETF. So you have to look a little bit lower. Like I said, it was basically a 14% upside move to fill that gap, which would be a 7% decline, which would take you right into this pivot top here and basically the midpoint of this wide range green bar. What else can we discuss on natural gas? Obviously, we do know from previous videos that we are typically entering a seasonality period where natural gas is declining in demand and usage, and the reserves tend to build. On the latest results, we did get a heavier than expected build in the reserves, which obviously helps put pressure on natural gas to the downside. I'm really hoping we do get some sort of a retrace after we cover our shorts to look to reshort this again and just churn some more profits. There is a strong probability that it does line up with the previous cycle, but on the UNG daily basis, let's just look here. There's a lot of key gaps all the way down to these 20 zones. You can hold this stock a little bit longer, but I have a fairly large position accumulated in natural gas short, and I will look to unload it just because there has been a lot of the risk to reward now eaten up in the trade. Do I still think there's tremendous more downside and you fill these gaps down lower here? I do, but I'm looking to potentially reshort it on the next bounce. Okay, so I like to always take my profits and run, and then if we get a new trade setup where it does bounce and I look to short again, that's the trade setups that I look for. So I'll be looking to close it out, sometime early next week if we get that final flush down on natural gas, which I think is to be expected. Okay. If you guys have any other questions on any specific charts, I'm always happy to take chart recommendation, what charts you want to have some analysis done. My primary focus is to always give the technical analyst analysis first. That is my bread and butter. That is what I'm stronger at. The fundamental analysis comes from my macroeconomic background and specialties, but then I also have other team members that help provide more fundamental research and insights, which as a swing trader, the fundamentals don't generally help me as much in the short term, but nonetheless, it can dictate whether or not you are in a quality company, what future, what the overall big macro pattern is. So as a swing trader, there's a couple different ways that you can trade. So you can trade the micro patterns, you can trade the intermediate macro patterns, and then you can trade the major macro patterns. And the major macro patterns are the biggest patterns that you see on the chart. They're typically the multi-year patterns. Then you have the intermediate patterns, which are typically, the 6 to 12 month patterns. And then you have the micro patterns, which are generally, weeks long. And then you have the ultra micro patterns, which are days long. So I tend to look for the overall macro pattern. Is this longer term stock heading in an uptrend or a downtrend? And then it just further enhances the probability. Once you understand the overall macro pattern at bay, you can often be a more nimble and more precise trader in the short term by knowing where the overall trend is likely to head to. So that's just a little bit of my background and our trading team here at Trading Capital. But we're continually looking to bounce ideas off of us. We're continually looking to have people challenge our analysis. If there is ever something you don't agree with on our analysis, any stock you may think, I urge you to provide some feedback and your insights. And I take everyone's opinion at face value. The beautiful thing about this business, about being in swing trading, being a trader, being an investor, and just being an overall person that follows the markets on a day-to-day and week-to-week and month-to-month basis, the beautiful thing is that what makes the markets is different opinions. And if everyone had the same opinion, whether a stock should be up at the all-time highs or a stock should be at the all-time lows, there wouldn't be much of a market. The fact that we have different opinions, different likes, different interests, that's what makes a market, and that's what presents opportunities. Unfortunately, not everyone can win in a market that is falling and where the fiscal stimulus is being withdrawn. Okay, so during the last 3 years, pretty much everyone could win in stocks because the Federal Reserve was pumping the stock market up with free liquidity. That's no longer to be. So now someone has to lose. And that's what we're seeing with this falling market and these high commodity prices, is now people are losing the inflationary battle, people are losing the asset bubble battle, and ultimately we will see how low this goes. I definitely think the overall market heads much lower. Commodities still could be in for a shock, but I think you have a defined interim top in oil, natural gas, and things of that nature. I think we are reaching that peak inflation where now we are seriously starting to tighten, withdrawing fiscal stimulus in the form of $95 billion a month. We'll see how long that lasts for, because the Fed always reverts back to their destructive, loose economic policy. And, it may sound counterintuitive when I say destructive. How can it be destructive when they're pumping up the stock market full of excess free money that's causing everyone's investments to go through the roof? Well, it's causing everyone's investments who is investment to go through the roof. And those people that aren't invested are getting screwed. And unfortunately, the majority of the population in the world are not invested in the stock market or the housing market or assets. So they are losing at the end of the day, and they're having their purchasing power destroyed and demolished year by year. That's enough of a rant. I was supposed to just stay on natural gas topic, but we went off on a little tangent there. Sorry about that. But yes, give me some recommendations. Anything you want to see, I'll be happily try to incorporate in my analysis. As always, look for Monday or Tuesday a potential sell on this natural gas, as I expect a short-term bounce to occur, potentially a retrace. Notice how we drop down on the UNG chart here, and we've left a very unsatisfying gap that is not filled. That's a big gap on the charts. So that would align with the previous cycle. If it retraces back to the high, we could have potentially another beautiful entry to short natural gas. That being said, enjoy your weekend, everybody.